The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out like we usually do with the NASDAQ. As you can, let's try it again. The DAX futures. It's completed that ABCD pattern up there, as you can see, and it is ready to go down. That's my opinion, but we've been up here for a couple of days. NASDAQ, that's close as I can get. It's a DAX NAS. Anyway, that's what it's looking at. If we take a look at the FTSE, it's even clearer. As far as the ABCD pattern, it's just pretty much spot on. And we've been here for 2 days, so it's going to be interesting, to see what happens. We've had a lot of activity as far as news, of course, rhetoric, whatever you want to call it. Whether that affects the markets or not, I don't know. But I will say that we do have what I think is a relatively bearish scenario setting up in the market for these next coming days, whether it has anything to do with the Syrian conflict or anything that else that's going on in the news, which is quite a bit, but we'll just have to wait and see. Okay, the only thing that let's get off my soapbox. Whoops, my soapbox just tipped over, so I'm not going to say anything. Let's take a look here at the NASDAQ, because this is very interesting what's happened here, folks. I wanted to bring this up. This is an hourly chart of the NASDAQ going back to the March high, the end of the March highs that we had, which was a reaction high. It wasn't the high. The high was 7,200. This was the reaction high. But if you'll notice how many times we've hit that 61% retracement, we hit it again yesterday. That's the third time that we've hit the 61% retracement. Now that's not a very good sign for being bullish. That is usually pretty good. So we'll see if this is going to happen the way it seems to be unfolding. But there's one other chart that we need to look at here with the NASDAQ. And remember, folks, this is my opinion. This is not. This is because I look at charts only. I'm not looking at anything other than the bar charts, the ratios, and the patterns. That's all I'm looking at. I've always believed that the sum total of all the buying and selling will occur on that bar chart. If there's more buying, prices will go up. If there's more selling, prices will go down. But let me expand this out a little bit here to show you what's really going on in the NASDAQ, because it's an ominous pattern, and I'll show it to you right here. As you can see, what we've really done here is, after we made the high, back on the 15th of March, we came down quite sharply. We had a 12% drop, I believe, and it stopped pretty close to the 78% retracement. And then for the last 7 days, all we've been able to do is to hit that 61% retracement of the March 25th high, and, which is more important, only the 382, which was a slightly higher high yesterday, of the high of the all-time high from March 15th. That's a very, very, very bearish pattern, folks. Only a 382 retracement in 6 days is not a very powerful pattern. So that's what I see happening there. I don't know what's going to happen over the weekend, but like we say, nobody else does either. But that's what it's looking at. Now, if we look at the E-mini S&P, we'll see something very, very similar. Now, this was sent out last night or early this morning where we were, because I wanted to point out that we did have really strong support coming in there. As you can see on that line, that's perfect 61% retracement of yesterday's low. And so far we've gotten up to the 26.56 level. That basically completes a 135 pattern. But if we go below the 26.30, folks, that sets up a price objective of 25.80. And that's 50 points below that level. And with the way the markets jump around nowadays, that could be overestimated or even underestimated. But at 25.80, look at it very closely, because there you would have an ABCD structure that would be at the 78% level, and off the low from April the 3rd, that would be a Gartley buy signal at that 25.80, 25.78, 25.80 level. However, below that level, you don't even want to think of where it's going, because we've already brought this up several times that the ultimate objective on this S&P is around 24.40. That's the one that we focused on in the newsletter, to give the folks that look at long-term things, what it really looks like. So that's really what we're watching here. So it's going to be very interesting over these next few hours and days, because of the potential for a strike against forces. So we'll see whether that's going to happen. And somebody has to do something. They can't do stuff like that and get away with it. At least that's what history says. But history is meant to be rewritten more than once or twice. I wanted to mention a little bit about the grain markets here, folks, because we were talking about these because of the report we had the other day. I wanted to bring this up. This was the pattern we were looking at in the soybean meal. It was very similar to the one in the soybeans, but as you'll notice there, the soybean meal was making a 3-drive pattern right at the 78% level, and it's backed off well over $1,400 so far, and it'll be coming down into a really strong support zone, another $3 or $4 lower in the meal. So it still bullish. All it's doing is completing that shorter term pattern, and that's the one that we look at as we come into a crop report, because unless you really have a really strong opinion and have a crystal ball, it's better to wait to let the crop report come out and then act. But frankly, when you have the crops are not even being planted yet. They're starting to plant corn right now, but things will change so much. There'll be at least one or two crop scares, at least during the year. That's what usually happens, and they're looking relatively good. If we take a quick look, we've got a break coming up here, but we'll look at this wheat market, because it's been really very, very technically about as perfect as you could get. This is Christmas wheat, December wheat. You'll notice we came down to a 61% retracement. The high we made 2 days ago, post report, was exactly the 78 level, 78.6 level, and now we're backing off a little bit this morning. So we expect it to come down at least to those old high levels around 29, around 5.29 a bushel. That's down about 14 cents from where we are now. That should hold some pretty good support in the wheat, because it does have a bullish bias. We've had some higher bottoms in here, but again, going way back, you'll see that 61% retracement up there that occurred at the 565 level. That was a 61% retracement of the high from early last year. Okay, we'll take a little break. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. We're going to take a quick look here at the Treasury bonds. And what I usually do is I look at a 4-hour chart that lets you see several months of what's going on, but you notice that that 147 level, that was the 38% rally in the Treasury bonds. So far that's held, but the problem is we have these news items that come out that cause people to form like a mini panic, and they rally to buy bonds for safety purposes. Well, folks, interest rates are going higher. They're not going to go lower. I mean, the long-term charts look bad. The short-term charts look bad. We've had a little bit of a rally here of about 5 points, 5 or 6 points, which has taken 5 weeks to do. That in itself is very, very bearish. And it still looks bearish, but there's still one possibility that we could have one more spike up to that, that 148 level. The old high was 147.06, and we could get as high as 148 if some more, scary news comes out. And boy, there's scary news everywhere. If it's not war with Korea, it's war with Russia. And I don't believe we're going to have any war with Russia, because Russia's now basically capitalistic. It's no longer socialistic, because you got all these oligarchs over there that are Putin's buddies, and they're all multi-billionaires. And I'm sure they're telling him, look, Mr. Putin, we do not want to upset the proverbial apple cart. But on the other side of the coin, after you have about $1 billion, it's pretty hard to spend $1 billion, folks. So, anything could happen, and it usually does. If you'll remember, about a week and a half ago, we had our good friend Bill Meridian on, who's been very, very accurate over the time he's been here with his TFNN, and he mentioned how negative the chart was between Russia and Trump. That was several weeks ago, and now maybe this is starting to unfold. How much this will react in the news, I'm not really sure. I don't really know, but getting back to the bonds, I'm rolling around here in areas that I don't understand as far as political, but getting back to the bonds, if we take a look at this bond on a daily basis, I just wanted to show you, on a longer-term basis, why it's so bearish. We made that 3 drive to a top pattern back in September. That was pretty much spot on. You'll notice that we had an equal rally in October to November. We just completed that same type of rally from February to April. But if there's one more flight to quality, you could get up to that 148 and change level if there was a flight to quality. And I'm not even sure flight to quality is the way to laugh, to talk about this, because it really can't. You can't quantify fear, I guess, or greed. Anyway, we'll notice that. One of the questions that someone asked me by email yesterday is why these numbers, seem to stop at times when there's some events happening. Well, I just picked one at random, and that is the Wynn casinos. I just want to get this up because this was on the, hold on here a second. You'll see here, this is Wynn going back over this is a weekly chart going back over the last 6 years. I just wanted to show you the bottom came in. You'll notice a double bottom in 2015 and 2016, exactly at a 1.27 expansion of the low from 2012. Look where the high came in. The high came in the week that they accused Mr. Steve Wynn Corporation. What would Steve's last name be? I guess it would be Wynn. When Steve Wynn was accused of harassment, and you'll notice that the market went up there. You notice it broke really hard down to 161, rallied really hard to 190. I didn't put this in here because it would have been too cluttered, but that high on the rally from 161 to 190 was exactly 0.786. I do not know why that number hits the way it does. I mean, these Fibonacci numbers. I just know that I see it more often than not. Now, Jim Bartolioni is going to be giving a webinar for TFNN on April 24th, describing how some of these things are related to music and harmony and sound and a whole lot of things going back into sacred geometry. I really hope you listen to that because it's going to be very interesting to show how this stuff has been going on for thousands of years, not just recently. But these numbers are here to stay. The problem is they don't work all the time. That's the big thing of what you're looking at. So keep in mind that that's what's going on. Now, there has been some news on Bitcoin overnight. I wanted to bring this up here to show you because this is where it was just a little while ago, a few hours ago, about 6 hours ago, and then news started to come out, not about cryptocurrencies. Evidently, it was more about blockchain technology, and we rallied 12% in Bitcoin very, very quickly. Now, we still believe that we've got a potential target down there of $4,000. So we'll just have to wait and see if it's going to get there or not. But it is volatile. There's no question about it. The open interest at the CME for Bitcoin has been disappointing, to say the least. We don't even have 2,000 contracts at the CME on open interest, which is, started on January 23rd. So we're several months into that, and virtually nothing there. And it dropped far more than half. It went from 20,000, to under 7. So that's a big drop, and yet there was no open interest. So we'll see what's going on. The next one I'm going to cover is the gold, because that's the real important one. This is the one that we were looking at yesterday. I sent out a special chart and a video on this right after the high was made up there at that 1362 level, and we were long the gold, of course, from the level quite a bit lower, and I suggested to get out at 1355. And the reason for that is, I'll go through it in just a second, but you'll notice that big ABCD pattern that went up here. Look how we took out all the highs from February, March, and April, and the market just quickly reversed. That is not a good sign, folks. When it does that, that's no different than what happened back in February. You notice we took out the high from January and had a big break. So that's it. But the key to this, from what I was looking at, was the situation that we had going on in silver. Just look at the silver market at the same time that gold is making new highs for the year. I mean, new highs above January. Look where silver is, folks. Silver is making an ABCD pattern. It's roughly, well, $16.97 an ounce, and that's a 50% retracement from the high in January, where gold is taking those highs out. This is not a bullish pattern for precious metals. And that was the primary reasoning for it, because when that happens, that's not a good sign. Now silver is, down below 16. I think it's in the 1630s right now, if I'm not mistaken. And gold's already broken almost. It's broken $27 from the high. Remember, the harmonic number is 34. Now, have I abandoned my long-term bullish view on gold? No, I have not. But all I know is that level up there is extremely, extremely important as far as resistance. So what I will be doing now is to, watch for a nice ABCD pattern and try to look for a very low-risk buy. This is not low risk down here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I did post the longer-term chart for Bitcoin showing the target down there around $4,500 a share. So we'll see what happens. Bitcoin would have to rally about $2,000 a share from where we are, and I have to get above 10,000 before I would think that the bottom has been missed, because this is nothing more than a short covering rally, if there is such a thing, because this market is not well controlled. Given the fact that it's well over a whole gamut of ways to buy it and sell it. So we'll see whether this is going to happen or not. I'm not involved in Bitcoin other than trying to learn a little bit about it. But the main thing is that it does have a lot of people following it, and it does have some potential. So we'll take a quick look at it. Anyway, sort of if you're watching for areas, we got the first hour of trading coming in now, and we're getting the usual bump that we have. The ABCD structure on the S&P takes you to just a little above 2670. As I mentioned, the NASDAQ chart does have some really bearish pictures as far as a negative pattern concerning the NASDAQ, and that had been the leader. Treasury bonds are now down a full point from where they were yesterday. That is a sign that interest rates are most probably going to go higher, so we'll have to wait and see if that's going to unfold. If you remember, what I wanted to do, I wanted to show you when these patterns fail. That's the main thing that I wanted to get to. But before we get to that, I had a request to take a look at Tesla, and I wanted to bring the Tesla chart up so you could take a quick look at it here, because it's a really nice way of looking. You can see the ABCD pattern that came down here at 240, 247. It was supposed to get to 240, miss it by just a tiny bit. And you'll notice the rally that we're having now. That should take us up to around 1310. I believe we're around 1306, 1307 right now in Tesla. So it should have a great deal of resistance up there around that 1313 level, because the trend is certainly down here in the Tesla. So it doesn't, this doesn't have a really bullish pattern anymore, because you have lower bottoms and lower tops. This is in a bear market. So what we're seeing now is the exact same rally that we had during February. We're seeing the same thing now in the March-April timeframe, and pay attention to it, because markets have a tendency to repeat, and that's an important thing to remember, because repetition is the mother of knowledge. So just watch for it, because we see it in these markets all the time, and they don't work all the time, but they work some of the time. That's one of the things I wanted to cover here, is when markets fail. And that's very, very important. Now, one of the things that we were looking at just the other day, in fact, it was just 3 days ago, was a beautiful pattern that we had in crude oil. I mean, I just looked absolutely perfect. I mean, you had a 61% retracement from the high back on the 25th of March, coming in at 64.80. You had a 78% retracement coming off of the first Gartley sell signal that we got, which was at 65.10. We dropped 2.5 handles all the way down to 61.80. But when we came into this rally, we had three numbers sitting there at the 68.60 level. We had a 127 expansion of the high from the 5th down into the 8th. And then we had the 78% retracement from the Gartley sell signal on the 12th. And we had a 61% retracement from the all-time high. And look what happened. It just went through there just like it didn't even exist. It lasted for maybe half an hour to an hour, and then it went on through. This is why you have to quantify how much you're going to risk when you're doing something like this. Like this is a $66,000 contract, folks. So if you wanted to be real conservative, you know, if you take just 60 pips, which would be roughly $600, it's tradable, because you'll notice that when it hits these numbers, it's very, very close to exactly where they're supposed to be. And they're never going to be perfect, but that's going to give you at least a place where you know how much you're going to risk. I know that there are people that trade without stops, but they are so disciplined that they're able to do that. But most people are not, for two reasons. One, they're not watching the monitors all the time, and the second reason is they have a lot of experience that allows them to have their belief system so strong that they'll know when it's time to get out, and that's the real key. Remember the words of Roy Longstreet: the first mistake teaches, the second mistake kills. The first mistake is you made a bad trade. There's nothing wrong with that. You're going to make a lot of those. The second mistake is you don't do anything about it, and that's the one that hurts. In fact, it can be lethal if you're not prepared to stand aside. That's a really important thing to look at. As we look at this crude oil, at the same time we were looking at crude oil, of course, we were looking at the heating oil contract, and I wanted to bring it up here to show you what was happening at the same time. Now, you notice now that we have gone up and made new highs in crude oil above $66 a barrel. We have not done that yet in heating oil. So this sets up a possible divergence, i.e. a double top. So this is something that we'll be watching over the next day or two, because as we've seen yesterday in gold, sometimes these markets go up there for technical reasons that are unexplainable, and all of a sudden they reverse. And this is what you try to do as a technician, is to look at those spots to see if there's a trading opportunity as you reach these areas where buying is supposed to be happening. If you've ever read the book Reminiscences of a Stock Operator, Jesse Livermore started out as a tape reader, and we don't have tapes anymore, but we've got electronic trading, which is pretty much the same thing, only at mega speeds. And if you learn to look for some of these things, that it's very, very important. When things break out into new high ground or new low ground and don't go anywhere and immediately reverse, that just tells you that there was no buying or selling at those levels. So that's very important. Now, we used to see this in the trading pits when I was on the floor of the exchange. You could see the volume of the runners coming into the pit handing in orders. You know, when that stopped, the only persons you were trading against were the locals, and that was very, very low risk. But when the orders were coming in from all over the world from the runners, you know, that was the unknown. So you had to wait till that stopped, and that's pretty much what we're doing when you're watching the tape, is to find where those things are going. That's right. Sell, Lewis, sell. Get back in there. That was actually the silver pit, folks. That wasn't the orange juice pit. It was the silver pit. I took a guest down there one day many, many years ago, my good friend Tom Hugard from across the pond, and Tom had a camera. He had one of these little, this was before cell phones, he had one of those little micro cameras, and he was standing on the ledge there taking all kinds of pictures, and all of a sudden these two guards came by and lifted him up, and he's not a little guy, he's about 6'3". They lifted him up and carried him out the door. They didn't even bother to warn him. Anyway, they didn't allow pictures being taken at that time, so it was rather funny. We still joke about it. They let him keep the camera, but they took the film. Anyway, let's move on to a couple other things that we want to be talking about. 877-927-6648. We'll be right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're going to take a look at the euro next. This is a chart pretty much right out of the newsletter, and I updated it this morning so you can take a look. That we did get up to that 61% retracement at that 123.80. I believe the high was 123.92. That's $120 higher. So in dollar amounts, but remember that's a $100,000 contract, folks, and it only costs $380 to day trade it. So it's got tremendous leverage, incredible liquidity. So if you're interested in learning how to trade using those currencies are very, very important. And trading at the Chicago Mercantile Exchange for most people, where they have the Merc contracts there, these are actual commodity contracts. They're not Forex contracts like you have at a Forex bank. But the difference is they have a bid and offer, usually within 1 pip or 2 pips of the exact price. Now, if you're trading foreign exchange, the bank is going to shade a pip or two. It's usually 2 pips in the euro, so you're paying actually a $20 commission. If you do it at the Chicago Mercantile Exchange, you're only going to usually pay $5. I think Interactive Broker charges $4 or $5 for in and out trade. That's $2.50 each side. I paid more than that when I was on the floor of the exchange as a local with a seat. So you have all the advantages of owning a seat without owning it. So, but look into that. The CME contracts for most people, and I'm talking about the big 6 contracts, folks: the euro, pound, yen, Swiss, Canadian yen, and Australian dollar. Those are the ones that are real liquid, and you can do the crosses like pound, yen, and some of those, not so much. But if you just want to focus on one thing, I would have to pick the euro, because that is the one that is probably the best. Now, we talked a little bit about the ABCD structure potentially here in the E-mini S&P. Last night, we hit that perfect 61% retracement down there at 2641. If we add the AB leg, to the CD leg. It's going to take us up to the 2670 and change level. That means we're going to take out that old high at 2672, which I don't think will mean very much at all, but we will have to wait and see, because if you look at the hourly chart that we focused on earlier this morning, you'll notice that those old highs back there were exactly the 61% retracement, and we've seen this happen with the NASDAQ, where it's been up there 3 times and not able to go through. Now, maybe it'll power through there and we close sharply higher than 2672, but until that happens, I think that we're getting ready to set up here for a potential, swing down. Remember, this is amateur hour, the first 45 minutes of trading, so watch that very, very closely, because, many people put their orders in, right before the opening, and that's usually the wrong thing to do. We're now taking the highs out of April 10th. We've already took out the highs of April 11th, and now we're shooting for that number that we're looking at there at 2670.72. And as Jim Twentyman's always mentioned, defy human nature, do the work yourself. So take a look at that chart, and you'll see the importance of that resistance coming in there at 2672. That would be very, very interesting to look at. Much like what was happening in the gold yesterday when we made a new high into new contract ground. And folks, I was watching it because we had a position for our 24/7 from down around the 1328 level, and when it made a new high there at 1369, I was shocked at how quickly it dropped $4. I mean, it went from 1369 to 1364 just immediately, and then I saw it to drop lower, and that's when I sent out the video and also the order to exit the gold, because of the fact that what I did was I raised the stop all the way up to 1355 to get out of it. Now what we're doing in the gold, we're waiting for more of a correction here. We're now down $27 from the high. That's in one day, and silver looks so doggone weak. It just doesn't make any sense. And remember, platinum, even though it had a really nice bottom in there, didn't rally very much. So the metals don't look that bullish. When you look at silver and platinum together, the gold was basically I guess a camouflage or something like that. But if we ever get gold to close above that 1370 level, then that will be incredibly bullish. But the volume yesterday, when it was making a high, there was a lot of people coming in there, and evidently it had to be something important, because the open interest actually increased by 34,000. That's a pretty big increase in open interest, and all those people now, when they come in this morning, are not going to be happy campers, because they're sitting underwater, and that's not a good place to be unless you're a fish. So anyway, taking a look at the Japanese yen, here's another one that has had some pretty good movement, and I believe that we're still ready to go higher. If you'll notice here, we did have a little bit of a hold on just a second here. All righty. Oh, thank you, Danny, for that information. Yep. Yeah, the cash gold did not make a new high yesterday. I don't even know if anybody follows that anymore. I guess they do, but they used to be that gold fix, the London gold fix. Boy, if that was ever a great name for something, that would be it. Okay, anyway, you can see the Japanese yen came down, held some pretty good support, and we backed off a little bit, and now we're getting ready to to go back and spend a lot of time there. Yes, I did work at the Goldberg Heimeyer. These guys were yes, they did. They were doing the NFA. This was back. The NFA started in 1980 something. The CFTC was 1975. The NFA was about 5 or 6 later after that. But they were really, Mr. Z, they were really the guys that were soybean traders. Man, they had some big traders, there, and especially in the soybean oil market, because I was involved with that during my years of trading soybean oil, and I used to deal with those folks all the time. Really nice guys and first class operators, as I recall. Anyway, that's what we're looking at right now. Now, I wonder, oh my gosh, we're only got a minute to go. Where does time go when you're having so much fun? I don't have any guests for tomorrow, but next week I'm hoping to have Rich Anderson on as a guest, and also Cy Monley. We need to talk about these grains because we're going to be pulling down into some pretty good support here in a few days. Remember, Norm Winsky was on yesterday and talked to us about these multiple patterns that we have coming in here over the next 4 or 5 days. It's going to be really interesting to see what happens here with some of these markets, because these are big cycles, folks, and the way it's looking, it's very, very suspicious. So always use a stop in these markets, because you can see, you can come in some morning and see, like we've had happen just in a few times, that the S&P could be down 50 or 70 handles. That's $2,500, $3,500, and that's you don't want to take those big hits. You got to have a lot of big winners in order to to make up for something like that. So just remember to protect yourself, because if you don't, you're telling the market that you know more than the market does. And boys and girls, I can tell you with 100% confidence, that's not the way that market works. The market understands what's going on. You don't. Men are often wrong. Markets are seldom wrong. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and someone's asked me about the gold. Folks, you can't do anything in gold till you get a completed pattern. All we had was an ABCD completion up there at the 1369. Now we're trading down 1344, so you have to wait for an ABCD pattern. Otherwise, you know, you're just out there in shark-infested waters, and that's not the best place to be. So you want to wait until you get a nice pattern. It'll take some time. It might be at a higher price. It might be at a lot lower price, but at least give yourself that much of a chance. I wanted to talk just a tiny bit about the natural gas, because we've talked about this over the past few weeks of a potential bottom. You'll notice that we made that beautiful Gartley pattern down there at the 61% retracement just a few days ago at the 264 level. We're now trading a little bit higher than that, but this has potential that if it can get above the 280 level to have some pretty strong legs, much like we had during December and January, and that's really related to, you know, that cold spell, and you saw how quickly that dissipated. So remember, these things follow the news, so it's very important, you know, to watch what's happening with the prices themselves, because if there's more buyers, prices are going higher. If there's more sellers, prices are going lower. That's the main thing that you want to be looking to see what's happening. Anyway, that's what we're watching. The only thing in the gold that looks interesting is the fact that, you know, it did make a new high, but the problem was there was just no follow-through with silver. There was no follow-through with platinum. That was a big red flag, at least from a technical basis, and now what we're waiting for is to see when the next buy signal will come in. The bonds are starting to weaken up. Anything below 141 in the bonds is going to set up 128. That's going to take a long time to happen, but interest rates are going higher. They're not going lower. Prices are telling us that. Doesn't make any difference what people are trying to tell you in the news. Just look at that chart, because you can see that there is a great deal of selling coming into those bonds. Maybe not over the last 4 or 5 weeks, but they haven't gone anywhere. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!